Yeah, well, I think the halving cycle is still very much alive. At least it was alive last time in 2020, because there was one party talking about well, the halving cycle and stock to flow and price increase, but there was also a very large group on the other side that talked about the death spiral and the hash rate going down and Bitcoin going to zero and Bitcoin was dead basically. And we've seen that same discussion in all three past halvings, and I'm quite sure we'll see that same discussion pop up again in the 2024 halving. So as long if there is two views fighting each other, I think it's still there. Personally, I think the halving cycle will be there until we beat real estate stock to flow. So maybe one or two more times, but indeed it cannot go on forever. And I like the super cycle theory or scenario because it gives you a scenario with a thought that's very reasonable. Yeah, I like thinking in scenarios. So the halving is one scenario, the super cycle is another scenario. Maybe there's even there will be more scenarios. But for me as a quant or analyst, nerd also, but I have to see it in the data. I have to see the super cycle in the data, and right now I'm not seeing it yet, and that's okay. So we have to track that. But for example, volatility. One of the things that's within the super cycle theory or view is that volatility must go down. And well, we've seen the last couple of months that we dropped 50% twice last year. I guess volatility is here to stay. The 2000 internet bubble, and the Fed had to accommodate that by lowering the interest rates, of course, which and it's much lower than the actual 10 years rate. It's also a short maturity rate, of course, but you can obviously see the difference between the Fed rate and the 10-year rate being very high after that 2000 internet bubble. And the same happened after the global financial crisis in 2008, where rates dropped again to almost zero. And then right now, after March 2020, they dropped again. And but it's a kind of a dual thing, because after each crash, so for example, look at the global financial crisis in 2008. They bring the Fed rate down, but it's also after a period where they try to raise the interest rates again. So in 2004 to 6, you see, they try to raise the interest rate, then something happens. In this case, the global financial crisis, and they have to bring the rates back. And you see that in this period as well, around 2020. So they were talking about raising the interest rates and going back to normal, and they really wanted to do that, of course, but they didn't succeed, because the next crisis was already there, and then they had to drop them again. So it will be very interesting to see what happens when they actually increase the rates, and I think they will. But I agree with Jurjen that they of course hope that they can do a lot with talking alone and not raising the interest rates, because it has a lot of negative impact on valuation, on equities, on the wealth effect of equities, but also on other assets like Bitcoin. I think the market recognizes that the interest rates cannot be hiked to say 3, 4, 5% to say levels that we saw in the early 2000s or late 1990s. I think nobody believes that is possible. So they can hike the rates a little bit. Maybe it's more symbolic than anything, and of course it will have some effect on the asset valuations. But the last thing they want is to crash the stock market. So they'll be very, very sensitive to that. Bitcoin is more like a commodity, a currency even, with a yield curve or an interest rates at least, not that far out as the US dollar, but at least 1 year out. There is also an arbitrage relationship there with interest rates and with currencies. that, and we didn't talk about it, but we talked about the link between the rates, the interest rates, the bonds, and the equity market. We didn't, but there's also a very tight link, maybe even tighter, because it's a direct arbitrage, and it's also mathematical, between foreign exchange and interest rates. If the US is going to raise interest rates and Europe is not, that makes the dollar more interesting, more attractive, and money will flow to the dollar will get stronger. And there's a very direct arbitrage relationship with futures, of course. You can buy dollars or sell euros right now or 1 year ahead and capture that spread. And if you look at Bitcoin as a currency, you can do the exact same thing through the exact same mechanism, namely the futures. So you can lock in, and currently it's low, but you can lock in like 8, 9, 10% in futures. Contango premium, whatever the future may bring, Bitcoin certainly did enter the geopolitical scene, right? And it has come a long way, because it has come from a cryptographic programmer's toy, basically, to a collectible that has some value, to an asset that even institutional investors take serious, like Fidelity, and companies use on their treasury accounts as money, like MicroStrategy. And right now we have seen, of course, the first country adopted El Salvador, which is a very small country, but certainly if that has some follow-up by bigger countries like Mexico, Brazil, or, well, I don't think Turkey, but some bigger country would be opening the entire geopolitical discussion that was opened, pioneered by El Salvador, and maybe Bitcoin is too big, and governments will not choose to ban it, but to regulate it and to tax it. That's at least what we're seeing right now. There's a very fundamental dilemma or discussion with central banks to be had here, because if you imagine a small country like El Salvador making the step to adopt Bitcoin as legal tender, it shuts the door to the IMF, because that normally a country like El Salvador would get a loan from the IMF, and the IMF would have some criteria that El Salvador has to fulfill, and then it gets the loan and blah blah blah. So but right now, of course, it's sort of fighting the IMF, or IMF is not happy, and it opens some discussion. For me personally, having talked to central banks and having worked with central banks a lot, there is a very fundamental thing about Bitcoin being the best currency because it's absolute scarcity, because of its portability, because nobody can debase it, etc., etc. And the other story that central banks believe in, that a currency has to be controlled, be able to print money and to taper and to steer and control the economy. You have to accommodate when the economy needs it, and I guess that control they're not going to give up unless they see that the absolute scarcity and the non-control will bring more benefits to the world.